My question is, which is one thing which confuse you between mutual fund or equity investment? Shubh from Bangalore says, if I'm not expert in finance, so let the expert to handle my money to expert people. Okay, okay. So you're talking about mutual fund managers. Okay. Subramanyam Rao is not Rao. Subramanyam from Bangalore says mutual fund is diversified investment. Okay. Okay. Oswaldo also says the same answer. We have to select equity investment while mutual fund managers does the job. GPSB says risk. Huh? What risk? Risk is the part of both the investment and equal risky. Both are equal risky. Okay, Govindra says reasonable returns in mutual fund and handsome returns in equity at times, and sometimes it is heartening. Okay, I think this is the right answer. Mr. Govindra has understood the question quite well. गोविंदराज जी ने बहुत अच्छे से हमारे क्वेश्चन को समझा, उन्होंने आंसर दिया कि म्यूचुअल फंड में रीजनेबल रिटर्न मिलता है, हैंडसम रिटर्न मिलता है इक्विटी में, बट समटाइम लॉस हो जाता है इक्विटी में. सो दैट मेक्स मी कंफ्यूज बिटवीन म्यूचुअल फंड एंड इक्विटी. Okay, so Mr. Pathati from Mysore says mutual fund can research well than individual before investing. Okay, Raj Kumar from Trichy says safer investment. I think he's talking about mutual fund. Oh, okay. Anyone else who can give me any different answer? Because almost all the answers are same. My question once again goes to all of you who have not been able to answer or who could not listen my question, and that is, what is one thing which confuses you between mutual fund or equity investment? जितने भी लोग मेरे पास सामने बैठे हैं, सब लोगों से मेरा क्वेश्चन जाता है जो अभी तक क्वेश्चन नहीं समझ पाए या आंसर नहीं कर पाए कि म्यूचुअल फंड और इक्विटी इन्वेस्टमेंट में इन्वेस्ट करने के बीच में वो कौन सी कंफ्यूजन है जो आती है. Rajkumar from TG says long term is best. Yes. Okay, I understand Rajkumar, but let's not talk about this long term because mutual fund and equity दोनों long term की चीजें हैं. You can do that. इक्विटी में लॉन्ग टर्म आप जाते हैं कि नहीं, दैट ऑल डिपेंड्स अपॉन यू. म्यूचुअल फंड में आप जाते हैं कि नहीं, दैट ऑल अगेन डिपेंड्स अपॉन यू. You understand, Rajkumar? So TN Pathsathi says direct on equity, indirect investment on mutual fund. Oh, okay, I like this answer. Sumanyam, rupees averaging in SIP. I think this answer will not be understood by most of the people. Don't worry, we will cover this answer going further. Ramchandra says, I think direct is best if you know fundamental analysis. Okay. Okay. So I've got a lot of answers. बहुत सारे अच्छे आंसर मिले हैं. More responsibility as a equity investor, less responsibility as a mutual fund investor. Okay, this is a good answer. Mutual fund is best way to handle volatility. Shiv from Bangalore says mutual fund is best way to handle volatility. Okay. Okay. Very good answers. I'm liking it. The people here, I see the people here are quite known about mutual fund and equity differences. Okay, Harpreet Singh from Chandigarh raised a very important point here. You have to be always active in direct market. Oh, okay. Cool. Any better answer than any of these answers or expressed here? Anyone? Should we let's move ahead and let's find out. Okay. Shamal Dattani, he is here. He says direct is best, but a very good site giving multi-bagger, and that is superb. Wow. Okay, I like this answer. Okay, P. Ramchandra asked me a very good question now. What is your advice, sir? I am going to come with my advice. So let's move. Okay, so most of you who all are here, I think most of you are quite known about mutual funds. So let's go and see what are the advantages of mutual fund. Okay, all of you said this point. Mostly, in fact, said that it is managed by fund managers. Absolutely, that's a very good, advantage of mutual fund. Yes. Okay. I will ask all of you to stop answering now this question. Let's move ahead with the topic here. So first point is professional management. The second point is diversification. Yes, there were few people who raised this point that mutual fund means diversification. Okay, and then mutual fund is about liquidity. You can cash your amount whenever you want. There are various mutual funds also where there are lock-in periods. However, there are many mutual funds where there is no lock-in periods. More choice, of course. I think there are more than around 500 mutual funds now available in India, more than 400 in fact. So, of course, lot of choices, and then affordability. Yes, it depends upon you. If you want to invest a smaller amount at a time, that is also possible. If you want to make bigger investment in mutual fund, that is also possible. So it has a range of affordability for everyone. So these are the advantages of mutual fund, right? मैं हिंदी वालों के लिए बात कर लूँ म्यूचुअल फंड के अच्छी बातें क्या है मैनेजर्स उसको मैनेज करते हैं फंड मैनेजर्स डाइवर्सिफिकेशन होता है फंड को एक ही स्टॉक्स में नहीं लगाते डिफरेंट डिफरेंट स्टॉक्स गोल्ड और कमोडिटी वेरियस जगहों पे इन्वेस्ट करते हैं लिक्विडिटी आप म्यूचुअल फंड को तुरंत कैश कर सकते हैं अगर आप उसके साथ आगे नहीं जाना चाहते आपके पास ढेर सारे चॉइसेस अवेलेबल हैं around 400 between 400 to 500 mutual fund schemes है nowadays in India और हर आए दिन नए स्कीम्स आते रहते हैं तो ऑफ कोर्स आपके पास ऑप्शंस बहुत ज़्यादा हैं म्यूचुअल फंड में एंड अफोर्डेबिलिटी आप म्यूचुअल फंड में आपके ऊपर है आप कितना फंड एक बार में इन्वेस्ट करना चाहते हैं वो भी पॉसिबिलिटी है सो दीज आर द एडवांटेजेस ऑफ म्यूचुअल फंड Hiral from Goa says, I missed something. No, we have just started with the first slide, Hiral. So you are well at the right time. Good evening to you. Okay, so going to second websites. So I think all of you are aware of this slide and all of you agree to this slide that these are the advantages of mutual funds. So let's move to second point. Okay, I have intentionally added this slide. I know this is a very technical, but आप इसकी टेंशन ना लें ये टेक्निकल चीजों का सोल्यूशन मैं आपको देने वाला हूँ आपको इसके बारे में कुछ नहीं सोचना लेट मी टेल यू मैंने ये टेक्निकल चीजें क्यों यहाँ पे ऐड की हैं it was very much necessary for me to add these technical words alpha beta standard deviation r squared Sharpe ratio expense ratio okay uh, there were people who were asking me how to select best mutual fund okay so for you to select best mutual fund learning these things alpha beta standard deviation r squared Sharpe ratio expense ratio which I have mentioned here these will help you quite a lot so why don't you do one thing first read this sentence these are intended to help you determine the risk reward profile of a mutual fund and in other way I can say that this will help you to decide the best mutual fund which is going to perform well in comparison of others so let's not go to the definition of these Lennon C good evening don't worry you are not much late I have just discussed about the advantages of mutual fund and now I'm the second slide only discussing about some technical ratios related to mutual funds. So my point is, all of you who want to select a good mutual fund, one of the best performing mutual fund, they can, they can just have a small idea of about all these things: alpha, beta, standard deviation, R squared, Sharpe ratio, expense ratio. For you, I will give you some example here. A positive alpha has to be positive. Simple. Yes, if you want to know how alpha can help me, so alpha of any mutual fund should be positive. Now you must be thinking, where will you get these information? Nowadays, most of these information are available online. कि कौन से म्यूचुअल फंड का अल्फा क्या है and the second point is mutual fund quarterly monthly depends upon various mutual fund आपको एक रिपोर्ट भेजते हैं आजकल usme they mention, in that report they mention generally these points, or at least they send you annual report. Even in that you can check alpha, beta, standard deviation. When you go for, when you go and apply for mutual fund, and you get a booklet. In that booklet also they mention all these details, so you can check that. Uh, So my point is, when you want to go for best mutual fund, you should know about these points. These technical stuff will help you a lot to decide about mutual funds. And why I have mentioned it here, once again, I will tell you these points, because I know generally when you go to find a good mutual fund, you're unaware of the technical stuff which you should look for. There are a couple of stuffs which you cannot look for at all, but you can definitely look for these ratios, you can say risk ratios, what it is said in terms of finances. So let's move to another slide, and another slide says what has been said. Okay, so we need to know also about the disadvantages of a mutual fund, because if you're investing in mutual funds, why don't you see about it? First of all, too many charges. On the last slide, okay, voice. A lot of people complaining about voice. Is everything okay now with voice? Yuvraj Patil, I was not actually okay. First of all, let me clear. Good evening to all of you. Can you hear me clearly? Is voice problem sorted out now? No voice? Okay, let me just check. It is breaking. Okay. It is breaking. Is that okay now? अरे बाहर आवाज आ रही है हाँ हो गया यहाँ भी लोग क्लियर कह रहे हैं okay okay yeah thank you so much all of you thank you so much yeah okay a lot of people want to know a bit about what I had mentioned on the last slide. So let me help you with a bit more information. As I told all of you, alpha should be positive. That will that's a good sign for a mutual fund. Same with beta. Yes, that's a good sign again for a mutual fund. Okay. Then coming to standard deviation, you cannot find out standard deviation. Let's not talk about standard deviation, because you can never find out the standard deviation of a mutual fund. And anyway, standard deviation is too much cooked up. So even if you try to find out from somewhere, uh, that will not help you. Since Sharpe ratio is also based on, but still, I can give you an idea about Sharpe ratio. Uh, yeah. So what I was telling you, the Sharpe ratio is also based on, you can say, standard deviation. That's the reason. Even if you try to know about Sharpe ratio, that will not help you, because standard deviation is unknown. Then comes to R squared. So good mutual fund, R squared of good mutual fund should be between 85 and 100. And you should never go for a mutual fund whose R squared is less than 70. I hope that everyone is understanding it now. Yes. I can give you one idea about the standard deviation, of course, that a volatile stock will have a high standard deviation, while the deviation of a blue chip company will be lower. This is how you can understand the standard deviation for the time being. And since what happens in mutual fund invest your money in different stocks, and every stocks have different kind of standard deviation. That's the reason it's difficult to find out the standard deviation. Okay, I hope whatever I am teaching you here, you guys have at least a small note of that point. Okay, expense ratio is, you can say, it includes various operational costs such as administrative cost, compliance, distribution, management, then marketing, then shareholder services, then record keeping fees, and so many other costs. So these makes expense ratio. Now let's go to. I think I have covered everything. Yeah, I told you you cannot know about Sharpe ratio and standard deviation easily. Yes. Okay. Sridhar is giving you this information that expense ratio is generally 2%. Yeah, it is. It is. It is. But it is not with every mutual fund. There are few mutual funds in India where expense ratio is about 20% also. So it depends. Yes, it's true that gradually more and more people are getting into mutual funds. Expense ratio has reduced since beginning. Oh my God, is my voice is still breaking up? Okay, so going to the next slide. Okay, people saying that voice is breaking up. Voice is breaking up or not? Can you all hear me clearly? I mean, I can understand voice kind of breaks for a second. Okay, voice breaking up. Voice breaking up. Okay, what I will do. We whatever is happening with the voice, that is due to weak internet connection. So what I will do is I will help you. I will help you with the YouTube link. No, you once, yeah. This is YouTube link. All of you click on this YouTube link and you can connect with this webinar directly. This is a YouTube link I have just posted here. Please go through the YouTube link and you can get connected to me. No, Mr. Patsati, I'm not walking. I'm just sitting on a chair. It is just because of a weak internet connection. Right, sir? Okay, so you can hear me now, and all those who are facing internet issue, voice issue, they can shift to YouTube. Is that okay? Because I can see we do live streaming of our webinar. I can see there is very clear voice on YouTube. Okay. Oh, okay. So let's move to this disadvantage of a mutual fund. Too many charges. Yes, I have already explained about the charges. There are many charges, and you don't even care about these charges. Many charges are there in the mutual funds which are never shown to you, and you don't even bother about that. A lot of people think that mutual fund people are not charging me. I'm just giving them a fund. But yes, the moment you invest, charges are already deducted, and then they invest the fund. And there are other charges which are, deduct annually from your fund. Okay. So high expense ratios. I have already told you what are expense ratios. But I will tell you again. Expense ratios can include administrative cost, compliance, marketing, shareholder services, distribution, record keeping fees, management fees. There are so many other fees which are included to expense ratios, and there are sales charges as well. Management abuses. It's a very important point to understand that unnecessary trading, excessive replacement, and selling the losers prior to quarter end to fix the books, because the managers who are handling the funds, they have to fix their book also. Window dressing is also a common issue in this market. So these are management abuses. Then of course tax. Oh, I think I have missed. I wrote this point wrong. This is not tax efficiency. This is tax inefficient. Yeah, because you like it or not, being an investor, you don't have a choice when it comes to capital gain payouts in mutual fund. And there are so many points like turnover, redemptions, gain and losses in security holdings throughout the year. So investor typically receive distributions from the fund that are an uncontrollable tax events. So these are the points. Shaman Dattani, the moment this webinar is done, that would be posted on YouTube, so you can go and check this webinar there. So a lot of tax efficiency. Then there are poor trade execution. Let's say if you place your, you must be knowing this fact that if you place your mutual fund trade any time before the cutoff time is market close होने का जो NAV होता है, और उसके बाद ही mutual fund managers can do their buy and selling. So that's the reason it's a very poor trade execution, because let's say there is a very good opportunity in the market to make good profit that particular moment. Just a moment.
Your line is now unmuted.
Okay, can all of you hear me clearly now? Is voice issues resolved? Do you feel so? Voice issues resolved now? Can anyone give me feedback?
Your line is now unmuted.
Can all of you hear me now? This voice issue is resolved now? Very low sound. Okay, so all of you can hear me now, right? Now it's good, better than before, right? Anyone else can help me with the right answer? Yes, so I can hear from many people now that voice issue is resolved. Now it's the best. Oh, Oswaldo, thank you so much. Okay, GPS Dean from Pune says better. Okay, thank you so much. The only one person, Har Prasad from Punjab, says low sound. Har Prasad, why don't you work on your system also now? So let's move ahead with disadvantage of mutual fund. You can see poor trade execution. I was talking about NAV, same day NAV. So what happens if you place your mutual fund trade anytime before the cutoff time for some day NAV, you will receive the same closing price NAV for your buy or sale on the mutual fund. So especially for investor looking for faster execution times, maybe because of short investment horizons, day trading or timing the market, mutual funds provide a weak execution strategy. And that happens with all the mutual funds. Then of course you don't have any control. The control is completely in wealth manager or the fund manager. Poor performance, yeah. So 75% of all mutual funds have failed to beat the major market indexes. That this is the advantage. Then I understand mutual fund has got choices, but there are too many choices. Too many choices for mutual funds. And then inefficiency of cash reserve. Right? So what happens? Mutual funds usually maintain large cash reserves as protection against a large number of simultaneous withdrawals. Right. And although this provides investor with liquidity, it means that some of the fund's money is invested in cash instead of assets, which tends to lower the investor's potential return. And that is one of the biggest drawback of a mutual fund. अगर मैं हिंदी में ये बात को बोलूँ इनएफिशिएंसी कैश रिजर्व को, तो म्यूचुअल फंड में ऐसा होता है कि बहुत सारे फंड मैनेजर बहुत सारा कैश भी हेज करने के लिए अपने पास संभाल के रखते हैं, ताकि उन्होंने जो काम किया हो, जो इन्वेस्टमेंट किया हो म्यूचुअल फंड में, अगर वो अच्छा रिटर्न नहीं देता है या उसमें लॉसेस होते हैं, तो वापस से कैश पुश कर सके मार्केट में और दे कैन मूव अहेड. एंड इस वजह से आपका बहुत सारा कैश एसेट ऐसे कैसा पड़ा रहता है which जो आपके पोटेंशियल रिटर्न को कम करता है. I hope that all of you have understood all the point of disadvantages of mutual fund. Any point which any of you could not understand here, let me know, because I'm going to move to the next slide now. Everyone clear with all the points? What are the disadvantages of mutual fund? No control. Okay, Har Prasad asked me, no control means you don't have control on your money. Let's say you invest in a mutual fund and you see that, let's say you choose a large cap mutual fund and you see that large cap are not performing, but you don't have any control to put your money in the market because money has to be put by your fund managers. So that is no control. That is again a disadvantage if you see it, from the eyes of an investor. आई होप कि हर प्रसाद जी आपकी बात समझ में आ गई. और कोई ऐसा पॉइंट जो किसी को ना समझ में हो? आप जब म्यूचुअल फंड में आपका पैसा होता है तो उस पर आपका कंट्रोल नहीं होता. और कोई ऐसी बात जो किसी को इस स्लाइड पे ना समझ में आई हो, प्लीज बताएं मुझे, सो दैट आई कैन मूव अहेड नाउ. सबको समझ में आ गया तो एक यस लिख दे फटाफट. लेट्स मूव अहेड आदित्य. ओके. Okay, Sridhar Hegde also says move ahead. So let me move ahead. Now we will be talking about advantages of equity investment. Okay, so these are the advantages. You can make huge profit, limited liability. I mean, because you are not a part of, that company. Let's say you have invested in a real estate company. So whether the real estate company is performing or not, that is not your headache. So that is a limited liability. हर प्रसाद जी अब ये चीजें बाद में डिस्कस करेंगे. Okay, and then hedge against inflation. Yes, equity has in long term has always been proven to beat inflation. So it's a hedge against inflation. Then free transferability. Yes, अगर आप if you don't want to have an equity of a particular company and if you want to transfer it on someone's name with the help of the company for which you have already bought those shares and with some SEBI regulations, you can transfer those shares. Hedge in more simple terms means either उससे बचाओ. आप हिंदी में कह सकते हैं बचाओ. आप अपने आप को महंगाई से बचा सकते हैं. और ये सिर्फ आपको इक्विटी ही प्रोवाइड करता है लॉन्ग टर्म। महंगाई से बचाना मीन्स इतना प्रॉफिट बनाना ताकि आप महंगाई को क्रॉस कर सकें, आप महंगाई की मार से बच सकें। दिस इज हाउ यू कैन से। Okay, Osvaldo asked me, cannot we change the funds like in insurance sector in ULIP? Okay, Osvaldo, that depends upon your company, whether the company authorizes you to change the one for scheme to another. That is possible in Indian market, but that depends upon the agreement you have with the mutual fund house, whether you can change it or not. Okay, and then you have share in growth. Of course, if let's suppose you have bought shares of some company, and if the company is growing, you also get shares in growth. Shares in growth, in another way, you can also say that you get dividend paid by those companies. Tax advantage, you have tax advantage. Yes, equity shares also offer tax advantage to the investor. The larger yield on equity shares results from an increase in principal or capital gains, which are taxed at lower rate than other incomes. Because you can see, आप देखते हैं शेयर मार्केट में आपको taxes apart from other businesses, other income sources आपको कम लगता है. So that is the tax advantage. Okay, and then stock split. Yes, so when company split the stocks, tradability of that particular stock increases, and that provides you a lot of liquidity. अब अगर मैं सिंपल भाषा में आपको समझाऊं तो जब एक स्टॉक को तोड़ा जाता है तो स्टॉक खरीदने के लिए अमाउंट जो मार्जिन मनी रिक्वायर्ड होता है वो कम से कम लगता है. इस वजह से ज्यादा लोग उस स्टॉक्स को परचेज करने की कोशिश करते हैं. एंड उस समय इफ यू वांट, आपको फायदा ये मिलता है कि आप अपना स्टॉक्स इजीली लिक्विडेट कर सकते हैं. सो दैट्स अ एडवांटेज ऑफ इक्विटी इन्वेस्टमेंट. Okay, and then liquidity. Yes, equity market. No, you can liquidate your stock anytime, whenever you want. That is again a benefit of equity investment. Stock split. Okay, so let me explain stock split in English this time. So whenever a company splits its stocks, what happens? The number of stocks increases. However, the margin money required for a single stock decreases. And because of that, the tradability of that particular stocks increases. And hence, you are at an advantage now to liquidate your stocks on a bigger profit. Okay, now one person is asking what is the share in growth. Okay, so when you are purchasing or buying share of a company, you are actually becoming a small partner of that particular company. Now let's say your company grows next year. So of course the company has grown up. Grown up means had got good profit. So that they will share their profit with their shareholders. And since the company has grown, so of course your share prices has grown. That's true. That's another benefit. However, if that company has grown by a good margin, they also distribute dividend to their shareholders. So you also become a part of growth in shares. So this is what share in growth is. So whenever you become a part of a company through share market, you get two different advantages. Your stock prices, if company is going good, your stock prices increases, and you also get a part, a portion of growth in the company in way of dividend. Okay, Arun Shravan. Okay, before that, explain tax advantage. Okay, Mr. Ramchandran, in stocks, the tax charged to you is very less in comparison of other incomes. So that is a tax advantage, of equity investment. Now, Arun Shravan from Panvel asked me, I'm a starter and a small investor and cannot bear loss means I want to play safe. How can I do it? Arun Shavan, if you want to play safe, leave this market. You know, this market is not for those people who want to play safe. This market is for those people who want to play smart. Losses are the part and parcel of this market. The biggest truth of this market, you cannot say that I cannot bear loss. You have to bear loss. Frankly speaking, this is hard to hear, but this is the fact. You have to bear losses. If you don't have guts to bear losses, you are not even authorized to make bigger profit in this market. How this is how this market works. So, if you're coming to this market, come strong, come prepared, or you become a part of any company like Nifty Millionaire who can help you with your investment. Or if you want to do that in mutual fund, go to any mutual fund houses and do it. And also one very important point: don't come in equity market with a small margin money. Otherwise, you will lose each and every penny of yours. This market requires at least 50, 60,000 in the beginning if you want to become a good player or if you want to make big monies from this market. Okay, Subramanya says long term, no risk only thing is to choose right company. Yes, that is a very good point. Risk is always there, but if you want to reduce risk, go for long term. That is the only right answer of your question, or Arun, if you still want to be in this market. Okay, how to pick good companies? This is something which we have already discussed, Mr. Ramchandran, during our last webinar. You can go on YouTube and you can write checklist before you invest. That was the topic of the last webinar. There you can learn how to pick good companies. We have talked a lot about these points. Okay, Kanti Bhai asked me, stock split is beneficial to stock investor. How? Of course. When a stock split is there, your number of shares increases. In long term, if company, I am not saying it is always an advantage. It's, you know, there are two kind of advantages you can do when stock is split. First, if the company grows, you can, you get more profit. And if you see that company is not in a state to grow, when a stock is split, as I told you, tradability increases, and when tradability increases, you can liquidate your fund easily. Yeah. So I hope you got the answer of your question, Kanti bhai. Okay, what is bonus share? Oh, that again, the company helps you with dividend, the company helps you with bonus share, and these decisions are taken by the administrator of your company, the promoter of your company, the board of your company, the company which you have invested into. So these are different way of helping people with whatever growth the company has gone through. They want to share some percentage to you too. So now going to the next slide. Okay, we will discuss about the disadvantages of equity investment now. Limited control. Yes, in equity, it is true that when you buy equity, you become partner or shareholder of a particular company. However, you don't have much control. Hardly possible to impact decision of the company using your voting rights. Uh, yes, yes, Mr. Parsati has raised a very good point that let's keep a question answer session at the end, not to disturb this point. So you have limited control when you have equity investment. Residual claim. Yeah, this is, I think, this is a very important point which I want to share with all of you, that income which is available to equity shareholders is after the payment of all other stakeholders. So that is the residual claim you can do when you do equity investment. So what happens when you do अभी हिंदी में बता दूं तो होता क्या है, जब आप इक्विटी इन्वेस्टमेंट करते हैं तो आप कंपनी के पार्टनर बन जाते हैं. ओके, कंपनी के जब पार्टनर बन जाते हैं तो ऑफ कोर्स आप सोचते हैं कि हमें भी उसी ढंग से शेयर मिलना चाहिए कंपनी के ग्रोथ का जैसे सबको मिल रहा है, बट एक्चुअली ऐसा नहीं होता, बिकॉज स्टेक होल्डर को हमेशा ज्यादा मिलेगा और आपको कम मिलेगा. दैट इज ट्रू. Okay, we will keep this question answer session at the end of this webinar, so please keep your questions ready for that time. Fluctuations in the market, yes, that is one of the biggest disadvantages of equity investment, and then high volatility. Yes, there are. Its market has got very high volatility. Then let's go to next slide. Okay, so there are some common points. Now what you have to do, we have to decide whether we should go for mutual fund or equity. And how you can actually decide first. Let's take common point out of this mutual fund and equity. We will take common point out. So common point of mutual fund and equity is risk factor. Both are highly risky. Mutual fund is always read by you when you go for mutual fund, or it is also shown by mutual fund companies that mutual fund are subject to market risk. So both are having risk factor. Yeah, a lot of people says this point to me. How can you say that both are having equal risk factor? Tell me one thing. The your in mutual fund also you have same risk, because in mutual fund managers are not, nowadays you hardly have good fund managers who are working with mutual fund, because all the good mutual fund managers who are good with their work, they are involved in making money for them, of course. And that's the reason, and and they are also have some restriction. Mutual fund managers also cannot do everything. As I had told you, they have to do, they have to manage their bookkeeping. So, book record they have to manage, and that's the reason they cannot do anything. We have discussed this point when we were discussing about disadvantages of mutual fund, right? So that is a very important point we have discussed already. That because when I was discussing the disadvantage of mutual fund, I have talked about this. Because mutual fund people have to do a lot of unnecessary trading. They do a lot of excessive replacement also, and sometimes, as I had told you, to fix the books, they have to do a lot of selling also. So that's the reason risk factor in both mutual fund and equity are equal, almost equal. Okay, now market knowledge. So yes, that is a question in both. Market, market knowledge is a problem in both mutual fund and equity. Long term, both has to be done in long terms. Information, if information about mutual fund is also not easily accessible, and equity also not easily accessible, but information are there online on digital platforms, and no guarantee of returns. None of them guarantee you any returns. So these are the common factors in mutual fund and equity. And now going to next slide. Now you need to ask, before going to decide mutual fund or equity, what you want from your investment. Can all of you let me know here what exactly you want from your investment? Please let me know, all of you, what exactly you are looking for from your investment, whether it is in mutual fund or equity market. ओके, अरुण कुमार मिश्रा ने कहा बिल्डिंग वेल्थ. आदित्य गोयला कहते हैं बेस्ट पॉसिबल रिटर्न. Anyone else, please, all of you, I want answer from all of you, all 40 people present here. Give me answer what exactly you want after making your investment in either mutual fund or equity. So Osvaldo said to get much more than the bank. Okay. So Manya says more returns on investment. Govindra says wealth creation. Arun Shravan says wealth creation for future. Har Prasad says wealth creation. Heera said wealth creation. Make consistent profits. Sanjeev Sutaria from Baroda. I like this answer. Good. Raveen Krishnan Rao shares wealth creation. Ramesh from Bangalore says wealth creation. Krishan Kumar, more than bank interest. Okay, Parth Sathi says very clearly that wealth creation and regular returns to lead good life. Arun Chaban, voice is clear. Sometimes it might break due to poor internet connection, but just manage with it. Okay, of course, I have made a list of few points which most of the people want. Wealth creation, best possible return. You want to beat inflation because whatever money you earn from any investment, most of the inflation eat your return and you get nothing in hand. Finally, whatever get you get also that does not help you to lead a good life. So of course you want to beat inflation. And then there are few people who also want to know what is exactly happening with their money, because when you put your money in the market, you know your mind is always there in the market. If you are not made aware of what is happening with your money, and if you don't want what is happening with money, I will suggest you from today onwards start knowing what is happening with your money, because that is very much necessary for you to know about what is happening with your money. And when you are clear what you want from your investment, so let's go ahead and check. Voice is not clear. Okay, some people are asking market is gambling. No, how can market is gambling? Market is always right. It's you who make it gambling. Oh, Govind Raj, thank you so much. You have written it so nicely. Your strong voice and good explanations marred by poor audio quality. Okay, thank you so much to let me know. Okay, just yeah, right. Just let me check. What can I do? Just give me one moment, please. Okay. Okay, what I will suggest you, all who cannot hear my voice clearly, that for the time being, just for a few more minutes, why don't you shift to just for 10 more minutes? Why don't you shift to YouTube link, and and then you get back to after 10 minutes so that we can discuss about question answer, because on YouTube link the voice is very clear. So please, for the time being, shift. I have already provided you YouTube link. Okay, Govindra says sometime it is very clear. Thank you, Govindra. So now all of you are clear. आप सबको पता हो गया कि आप actually investment से क्या चाहते हैं. Mostly want wealth creation, good life, good return, high quality return, and consistent return. Okay, so for that, let's discuss some more points about mutual fund and wealth. I mean, equity investment. Now, these are the facts about mutual fund. There are more than 50, around 50, in fact, mutual fund houses in India, and more than 400 mutual fund schemes available in Indian market. As per Association of Mutual Fund of India data, in November 2013, there were 293 schemes of equity mutual fund in India. Now you think yourself. Mostly go for equity-based mutual fund. Now you tell me there are 293 mutual fund schemes were there in market in November 2013. How a common man will decide which mutual fund to go for? That's the biggest challenge in the mutual fund. Yes, and this is a very important point which I want all of you to understand. Mutual fund schemes are not just subject to market risk, but there are many other risks associated with it. Mutual fund managers find it difficult to manage a mutual fund and they have to work with various constraints. Yes, I have already discussed about various constraints, turnover, redemption. There are various constraints which I don't think we should go in detail, but yes, yeah. So that is a very important point. Okay, Arun Shravan says I have read that ETF is more safe than mutual fund. Each ETF is also a type of mutual fund. So how can it be safe? Even they do investment in equity. So that is a very important point. And now let's see some facts about equity market, equity investments. Investment equity requires that an investor should have patience, ability to withstand volatility, and not challenge toward the market movement. And if you can do these things, you can easily make good money in equity market. A lot of people ask me what time frame I should invest. Whatever time frame you think it will take to achieve your goal. Because without goal, don't get into investment market. And investors should always target good at stocks or index. Just don't chase market. Equity is always perceived to be the best asset class. However, you should not just run behind best asset class. There are few people who said that I want a return more than banks. So return more than banks can definitely be given by mutual fund also. Banks, more return more than banks can also be given by some other government bonds. So you can go for that. If you just want simple interest of a return of around 10%, 11%, around 10%, I'm saying, then you don't need to come for mutual fund and equity market. Okay, and then of course we need to decide now. A lot of people are asking me, you tell me which should you go for. So now you could see that in mutual fund you have a lot of charges. You also don't know the background of the fund manager, because if the fund manager would have been a good fund manager, why the same company is coming with so many schemes? Why not one scheme? Just because they don't want to they don't want to show you the performance of last scheme in which they could not perform because of their fund managers and other constraints. So when if you actually have lot of hard work to find the best mutual fund. I gave you data that there are more than 400 mutual funds in Indian market. I think you remember this data which I just mentioned about 400 into around 300 schemes, one type of mutual fund in India. Oh my God, how you will decide? So it is a very complex, and then you don't know about R squared, alpha, beta, expense ratio, you know, sharp ratio, because these things decide the performance of mutual fund. And due to these things, sometimes even a best fund manager cannot do anything. Now you tell me, there are around 300 mutual funds who are equity based mutual funds. And of course, all have to invest in good stocks only. We will all invest in good stocks. So they have, another fund manager has nothing to do something new. So all of them invest almost in the same companies, and that's the reason you see most of the mutual funds, even good mutual funds, are at the same level. The average CAGR, you know, the average CAGR of a mutual fund is around 10 to 12% only. I'm talking about the long term. Sometime in a particular year, a mutual fund can help you 25% also, but just for a year or two. and a year or two is not going to make you wealthy. All of you said that you want to do wealth creation. So equity investment have always proven time and again to meet the long-term goals. Now, a lot of people were asking me this question that what do you think in your opinion? So let me tell you that as we have mentioned here, despite some volatility, equity has delivered the best return in long run. If I see in the last 10 years, the average return from equity funds has been quite impressive. So if you are investing for your long-term financial goals, then you must have equity in your portfolio. Mind it. I will repeat this sentence. I said, I don't remember exactly, but if you are looking for long-term financial goals, you must have equity in your portfolio. I also say that, why I said that long term, because in short term equity is risky. But since we are talking about mutual fund and equity, and I have already discussed this common point that both is good for long term. So of course, equity, you have to have equity in your investment portfolio. The longer you remain in, invested in equity, the better is going to be the return. This is the fact. The advantages of it being in nifty, sorry, yeah, or equity comes from the power of compounding. You have to use power of compounding always. That is also being done in mutual funds. In equity, also do power of compounding, because the earlier you start investing, the more time your money gets to go. Okay, so now all of you have said that you want to do wealth creation. So my answer to all of you, can all of you hear me now? Is voice quality clear? Is voice quality clear? So I'm going to answer the question, all of you who said that they want to do wealth creation. For wealth creation, they want to do investment. Can all of you hear me clearly? So that I can answer this question, how you can do wealth creation. Can all of you hear me? Can I get some answer? Can all of you hear me? Can I get some answer from all people? Everyone, can you help me with the right answer? If you can hear me or not. Is my voice audible to all of you? Okay, thank God. Someone gave me the answer. Okay, Mr. Ramchandran, thank you so much. Others can also hear me, right? So Manya says no voice. Don't say no voice. Say that break, broken voice, or poor voice quality. No voice at all. Okay, voice breaking continuously. Okay, so Sridhar Hegde from Belgaum says that he can hear broken voice. Yeah. Okay. I'm really sorry, people. Unfortunately, I don't know. This net connection today is not supporting me, and that's the reason I tried my best to come up with the right voice quality. I know I checked my all the PC and RAM and my headset. Everything is working fine, but yeah, I cannot do anything with the net quality. But you just bear me with this bad quality voice. However, as I have told you, that the voice is clear on YouTube streaming, live streaming. So once this webinar is done, you can go to YouTube, you can listen this webinar once again, and whatever I have said, you that will be clear to you there. Yes, I was going to answer this question of all of you because everyone present out here said that they are looking for wealth creation. So, in order to create wealth over the long term, you need to put your savings into assets that can actually deliver higher than the inflation rate. Nowadays, you've seen India, GDP is growing with a rate of 7%, and the inflation is, increasing with a rate of 10%. 12%, in fact, 10 to 12%. You know, and that is so you have to put your money, you know, that can deliver higher than inflation return. Else, inflation, as I told earlier, also inflation will eat into the returns and won't help you in accumulating a corpus. So, whatever be your risk profile, or you can say the quantum of your savings, it's imperative to use equity backed investments products to nullify the effect of inflation, especially over the long term I'm talking about. And as I have already told, that the veracity of using equity to meet long term goals have been proven time and again. So in my opinion, you should definitely go for equity, so that you can achieve your wealth creation. And along with equity, you should do power of compounding, because and start as early as possible in equity, because as I have told you, the more time you give to your money, the more it grow. So that is very important to understand. Okay. Neeta Jha from Bokaro says only broken voice can be heard. Neeta Jha, what you can do now, I'm very soon I'm going to wrap up with this webinar session. And once I wrap up this webinar session, is going to be posted on YouTube. You can go on YouTube later in the day and can listen everything on YouTube, because the recorded version of YouTube is going to be very clear, no breaking of voice, and you can to enjoy listening it there on YouTube. Anyway, before wrapping up this session, I have already given answer to all of those who were asking me which should you go for. I'm not saying listen this sentence, read this sentence. I'm not saying don't go for mutual fund. I'm saying when mutual fund is also, it feels to you, all of you in the beginning said that it is handled by managers, but managers also cannot do anything, and all the managers who are associated fund mutual funds, they are not good. If they would have been good, why the same mutual fund house is coming with different schemes? you know yeah, of course, because they just want to divert your mind. Sometimes they come up with a large cap mutual fund, mid cap mutual funds, equity based mutual funds, international market mutual funds. There are various mutual funds the same company is coming up with. It's only because they don't have competent mutual fund managers. And as I have told you, a mutual fund manager has to work in different constraints, many constraints, and because of that also the return in mutual fund is less. Okay, before I go and answer any question here, one of our existing client, his name is Maruti from, I think he's from Karnataka. I remember I have talked to him many times. He asked a very important question: Is is short NAV announced is hooked up one? Okay, so he want to know that NAV, net asset value of particular share. When you do in mutual funds, they show NAV. You must have seen. So he's asking me, is short NAV announced is hooked up one? Mr. Maruti, it's not that it's always hooked up one. Yeah, it is hooked up one sometime, but it is not always cooked up. In fact, what happens with the basic problem with mutual fund is they, due to diversification, they have a pressure of doing diversification. Otherwise, people will stop putting their money with mutual funds. So, due to this pressure, they diversify fund, and in diversification, a fund manager cannot go, cannot find out many good companies. So of course he puts some of the amount in some good stocks. However, most of the amounts are kept in those companies which do not do a good performance, and because of that, ultimately the NAV of a mutual fund is not what you think it should have been. So it is not always cooked up. It is right also most of the time. Yes, sometime it is cooked up. As I have already mentioned this point, technical point, that standard deviation and sharp ratio helps to hook up NAV. So that is done. That is 100% done. I know that this is one of the point related with NAV. Now, the second question which Mr. Maruti have asked me here, why the funds do not show the same rate of growth as that of Nifty? Fund managers do not buy and sell the way it should be done. The moment they get a new client, they buy and sit tight on that. There is no growth of funds. They do not buy and sell to make more money. Some of my funds put in big AUMs have not grown irrespective of last year's boom. Return is not even simple interest put in bank. Yes, Mr. Maruti, that's right. You know what happens with most of the mutual fund, as I told you, they have a big pressure. That's the reason I told you a fact that more than 75% of mutual fund have done very worse. They have not even given in a rate, return which a bank gives to you. And the big problem with these mutual funds, as I am always saying, is they have to do diversification. And diversification is good, but generally these mutual fund managers have to select 10 to 20 stocks. And this when you go to select 10 to 20 stocks, and they have different schemes again, so how many stocks they can select, and that becomes the basic problem. And in fact, in place of diversification, over diversification takes place there. Then the second problem with the fund managers are they have to follow a lot of constraints from mutual fund companies as well, because every quarter a mutual fund company has to release its report. During report, they have to show big transaction. So even at that moment, if it's not a good time to sell some stocks, a fund manager is bound to sell those stocks just to show the good report of that particular mutual fund. So that is also a big problem with mutual funds. So every quarter they have to struggle to fix their book, which they are going to show as a report to everyone. And then I told you there are a lot of risk ratios, alpha, beta, R squared, Sharpe ratio, expense ratio, which has to be maintained again. So these are the problems because of which it becomes very complex for even fund managers to give you the kind of return which you always expect from mutual funds. And I understand you said that you have put your money in big AUMs. Let me tell you, I have data with me, JP Morgan mutual funds. I have some good data, LNT mutual fund, LNT finance mutual funds. They have just given an average return of 2.6%. Average 3% you can say return. So big AUMs, but it's still giving very low returns. Yeah. And then third question, which Mr. Maruti has asked, is there any audit of fund houses, how they are handling public money? Uh, Mr. Maruti, I will answer this question this way, that whatever these people are doing, they are not doing on their own wishes. When you go for a mutual fund, you sign many pages of a mutual fund, and there everything is mentioned by these fund houses. It's not that they are cheating with you. It's just that you are not able to understand those facts. You're not paying attention to those points. You're just thinking that your money is being taken care of by professionals, and that's the reason you just ignore these points on the papers, and that is the biggest problem with you. That's the reason now you're thinking that there should have been an audit of fund houses. Still, audit of fund houses cannot do anything, because whatever is being done by these mutual fund houses, everything is shown to you clearly. whatever expense ratio they are charging to you, sales charges they are charging to you, what is whatever they have other important information. Who is the fund manager in for that particular scheme of mutual fund? Everything is shown to you clearly. But unfortunately, in India, it is not a practice of a common man that you go and see. You try to read all the books given by mutual fund people. You just sign. You do a lot of signatures on those papers, and you just go ahead with mutual funds. So it is your mistake because of which you are suffering. I understand. I understand your sentence that the return which you have got is not even simple interest put in bank. Let me tell you my point also. I had purchased a mutual fund 5 years, yeah, not 4 years before. It was SDFC, uh, um, SDFC Life, and I don't remember the mutual fund name. I put 50,000 rupees in that mutual fund, and till now, the total return after 4 years is just 54,000. I have also suffered, but it's good that I stopped, investing extra money in mutual fund once I knew that the fact, you know, about these points which I'm discussing with you today. After a year, I met a person who was into mutual fund and insurance industry for so long, and he gave me these background information. He told me on that day itself that your mutual fund is not going to help you with good return, which you have thought. And I was happy that after 10 years, I'm going to get a very good return. But he suggested me, and he gave me some data, he gave me some papers to read to understand the fact why, on what basis he was giving me this information. And I read and I came to know that okay, why my mutual fund will not perform. And all those information which I gave you here, technical information, these were those information. And on that basis, I came to know that my mutual fund will not help me with good return, and hence I discontinued my mutual fund after a year. So that's the reason, I said in the beginning also that why I am including this technical slide, especially technical information. And I explained you also, I gave you, not detailed information about those technical stuffs, technical risk ratios, in fact, which I have mentioned earlier. But at least I have given an idea that when you go to check a mutual fund, how can you find out, you know, which mutual fund to go for. As I told you that alpha should be positive, beta should be positive, R squared should be 85 to 100. Expense ratio, that you can see. If expense ratio is again more than, you can say 2%, then that's not a good sign. So these are some points which you always need to see when you go for mutual fund. So go for mutual fund. I'm not saying don't go for, but always put your money in equity, because putting money in equity is comparatively easier than putting money in mutual fund. Because here, one point with equity is you can also monitor equity easily, but it is very tough for you to monitor mutual fund. And if you want to know after what interval you should monitor your mutual fund, at least every quarter monitor your mutual fund. Whatever mutual fund you have done investment till now, try to monitor mutual fund after every quarter. So that is very much necessary for you. Otherwise, things your investment is at a big risk in mutual funds also. Though you think that professionals are managing, who are these professionals? Do they have done anything bigger in their life? No, they don't have very big personal achievement. Why are they? Why they are not a big man in Indian market, finance market? If they are good with their knowledge, why they did not make big money in this market? By their investment, they have whatever money they have made. They have made money by investing your fund, managing your fund, but they are not making money themselves. So these are few points also, and as I told you, some other constants are stopping them to come up with good returns in mutual funds. And these constants are which I'm talking about, these restrictions which they have, these fund managers, There is no solution of these restrictions. So try to understand this fact, and I have already given you my view which segment you should go for. Okay. Now, please, anyone who is having any question, please shoot your question to me. I will request Mr. Parmeshwaram because he was having many questions. Neeta Jha, Udit, Sridhar, Harprasad, Kanti Bhai, any of you, Mr. Parsathi, any of you have any question, please let me know. Please let me know. Any question from any one of you before I wrap up this session of today? सर ये बाकी के स्क्रीन नहीं दिख रहे. Just do what I stopped sharing. So since I am not getting any question from anyone, so I'm going